Hey, good morning, good morning. Morning, Scott. Morning, Michael. Morning, Philip. Morning, Arturo. Morning, Dan. Morning, Mark. Morning, Craig. Morning, Maurizio. God, I need to brush up on pronouncing your name, I guess. East Tennessee, that's not a common name. Patrick, Sledge, morning. Francois, got that one. My wife taught me that one. And David, morning, everybody. If you want to chat with me while we're live, all you got to do is click the subscribe button, whichever side it's on. And a few seconds later, you'll be able to chat with us live. Valerie, morning. Penny, good morning. Good morning, everybody. Glad to see you. CPI numbers coming out, and not too bad, I guess. Market popping a little bit, but remember, this is a FOMO rally. Everybody's, everybody stayed out in this whole move up off the bottom since October, despite me beating the drum saying, hey, like, that was the bottom. Morning, Jason. And I mean, if you get in now, if you're like, oh my gosh, I'm missing out. That's the FOMO. That's the fear of missing out. Please, for the love of everything, don't jump into this right now. It's so likely to retrace all the way back down to the March low even. When it finally breaks, it's going to be violent. It's going to be a big down. It may not go lower low. Stay tuned. It depends on how high we go right now. Please be careful. It doesn't mean you can't day trade it or take short-term opportunities. Don't buy long-term positions right now. Wait for the pullback. We're going to get a pullback. It's going to be a better opportunity to load up positions. Right now is not that time. Please be careful. Please, please, please. I don't want you to come on the chat here, in the next few days, be like, JT, oh my gosh, I got in and this whole move caught me by surprise. Please don't. Come on. It's not a surprise. Now, the Fed pricing in, like with the futures, everybody's expecting no rate raise. If we get a rate raise tomorrow, watch out, please. It's kind of a coin toss, I feel like, even though the market is pricing in no rate raise. Just hold steady. Everything's done, hold the line. As Braveheart had, hold. I don't know if they hold or not. We thought they might hold before. I don't know. Please be careful, for goodness sakes, for your account's sake. And remember, all trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. I may be full of crap, Just because I predicted stuff before doesn't mean I'll get it again. We may not do the pullback. We may just, we may just blast off to an all-time high. I doubt it. Seriously doubt it. And this presentation here is intended to be informational, educational, fun. It's not a recommendation to buy or sell anything, financial instrument or otherwise. Somebody left me a nasty gram comment yesterday on the video that this was all a sales pitch. I don't know how you take yesterday's video as a sales pitch, but whatever. It's on the comment if you want to see it yesterday. And if you desire personal financial advice, hire and consult a financial advisor. But you know what? I couldn't do this if I didn't get some kind of money off of this, because my family's got to eat food, and I got to pay bills. I still have a mortgage. I don't have a car payment right now because I drive a 20-year-old vehicle. Almost all my vehicles are 20 years or older. I guess I have one 2007 vehicle. So anyway. All right, CPI coming in. 4. Not too bad, not too shabby here. Continuing the drop. We'll probably see it continue on dropping. I don't know that we'll get back to year over year 2, but we may arc back up here. Just keep an eye on it. We get a print every month. This one coming in a little below. Nice. I mean, that works, right? The monthly here, month over month, 0.1. Not too bad. I don't know about you, but that's still inflation. That's still 4% inflation. Still hurts. Anyway, core coming in at 0.4. This is the core stuff. This is stuff you have to buy. Like, that's still coming in at 0.4. That's not getting cheaper. Not in my book. And then they don't report the core year over year, but I'm sure that's still rocking pretty good with a 0.4. So, all right. Rest of the day, we have the FOMC meeting starting, and then tomorrow we get PPI, core PPI and PPI. Then at 2 p.m. tomorrow, the fireworks, the FOMC, the statement release, the rate change, and then, of course, Jerome Powell cannot resist speaking at 2:30. That's likely to cause some fireworks in the market. And maybe fireworks up, and maybe fireworks down, and maybe fireworks both ways. All this stuff is possible. We have been at epically low volatility in the market, and I wouldn't bet that we're going to continue to see epically low volatility in the market. Core retail sales coming out Thursday before the open. Also, industrial production and capacity utilization. Maybe not the biggest mover, but we also get some natural gas and other news and long-term purchase. And then Friday, we also get an FOMC member, Waller, speaking after the FOMC meeting wraps up. And then we also get consumer sentiment, which is usually a market mover also. So we've got market movers all week. We have futures expiring this week, the June contract of futures. If you follow me and I use the futures charts to do my price predictions, well, we're in this weird period where some charts you look up have a giant gap up, and then other charts you look at don't. It's because the constant contract, the ES1 exclamation point I use on TradingView, or if you just load up TOS, Thinkorswim, and you type /ES or many other platforms, if you just type that in, and you're looking at that what they call the constant contract, which there is no such thing, it just automatically rolls forward. Well, there's a gap. I discussed it yesterday why there's a gap, and futures contracts expire. We're moving from the June that expires this week to the September is the active contract that we're going to be using and trading as we talk about futures. That September contract is yesterday it was running about $40 difference from the June to the September contract. That's just like the time value baked in. They call it contango and backwardation when there's a price difference between the current month and the front month. The front month being out there in time. And, when sometimes that difference isn't always positive. That's what happens in VIX often is, that's why a lot of the VIX products like UVXY lose so much value. A lot of times the front month will be lower in price and they lose money when they roll. And it accelerates the losses on some of those leveraged VIX instruments. The S&P can operate in backwardation. CL, oil, gasoline, all of them can operate in either contango, where the front month is more expensive, or backwardation, where the front month is cheaper. So keep it in mind that these things affect the futures market as we roll forward. This only applies in the indexes like 4 times a year. We move from the right now we're in the June moving to September, and then in September will be September moving to December, and then in December will be December moving to March, and then in March we go from March moving to June, and then the cycle starts over. And this happens every 3 months. But also lining up with that is the end of the quarter. So we have a huge options expiration with the end of the quarter. It's also the end of the half. If you're playing half-year options and hedging, you're managing a big chunk of money. We're coming to the end of the half. And we have the weekly, and so all these things kind of expiring this week all together. That can play volatility on top of all this economic news. So please be aware, please be cautious, know where you're at. And I got to reconnect my chart here. So VIX showing a little bit of pullback here. Just a touch. And if we look at the VIX, this is the VIX futures. We're actually getting a little bit of red here, pulling back a little bit. We had a nice big pop. I do expect this to rally up and probably retest the roadmap line at the minimum here in the next few days. I mean, look, it's been sitting up there in that zone almost all year. This little diversion down, I don't know. Doesn't look like it's going to stick to me. But this is a constant contract here. And look, we haven't been down on this level for years. It's right back here. Everything better than we've seen since beginning of 2020? I don't think so. A lot of threats out there in the world. A lot of crazy stuff going on. So please be cognizant and aware. You know, VIX is not pricing in all the risk right now. And we are getting a little pop up to the tails here, but we're not up in this zone where we've been churning. So looks like it may be artificially depressed. Please be careful. It's not pricing in that pullback that is almost inevitable just due to the sheer move up off the lows that we have seen relentlessly going higher this year. All right. Reload the chart real quick. And reset everything. I'm going to turn it. I've been working on this new thing. We'll talk about it at some point in the future. And SPY SPX here. I'm gonna have to. Got to pull everything down here. So SPX breaking higher, potentially gonna push up to that 44.24 area. Be careful. We turn down there. This thing starts getting sketchy. Just be careful. S5FI still sitting in the middle. We could still push higher. There's still some energy left in here. We're still in that coin toss zone I've been talking about. Now, on the simplified chart, you may or may not have seen me talk about this. It might happen that we continue to push on up here. I give it like a 10% chance that we just blast on up, keep on trucking. You know, we may come up to here, that 44.24 area, and then most likely that we get a nice big fat pullback back to this top of this consolidation that we saw where we had trouble breaking out. You can see all these, couldn't break through here. Nice big fat pullback, couldn't break through here. Churned for months, it felt like, and then pop. Most likely come back and retest the highs of that at least. At least. Just keep it in mind. We could come back to that 4,200 level, and I've got it labeled as most likely that we see this giant pullback off of this oval. We're right in the middle of the oval. I mean, I drew the target. We hit it right dead center. Now what comes next? Small chance we go high, even higher. Bigger chance that we pull back. All right? And if you think I'm full of crap, hey, you don't have to listen to me. You can jump all in right now. Put everything in the market right now. Go for it. Don't miss out. You and everybody else is jumping in right now. If you're strategic and wait, down here is going to be some opportunity. We do have support in a nice big fat box right here. This would be a target. I feel like we're more likely to go test this box right down in here. That would set the market up for a much, much higher move, potentially all-time high. Whereas if we just keep chugging, we're going to run out of gas and then get a sizable pullback. All right. The market only has so much energy to keep grinding higher, and at some point, we're going to get a sizable pullback. This is not a new bull market. I mean, look over here. I mean, it is moving bullish, but this is not like the new all-time we're running to, this is not this thing over here where we just keep grinding, although we did get some sizable pullbacks in here. That's not what we're doing right now. We're not getting any sizable pullbacks. We haven't had a sizable pullback since February. We need some more of these. We need, at least one of these pullbacks. All right? Even in this relentless chug higher, we get these multi-100 point pullbacks. Even in the move off of the COVID low, we got sizable pullbacks, several of them, as we work to the top. So this little stint right here, moving up like this is going exponential. It's going to break. It's going to come down. Please be careful. It can stay irrational for a while. I'm going to wait until it's a strategic opportunity to get back into some stuff. All right. NQ also going ridiculously straight up, just like S&P. Let's look at it on this chart over here, coming up to that March high right there. That was kind of where I expected it to top out. No, that is that we did jump forward contracts on here, so we're actually running about 40 points. I don't even know what on it is on ES. It's about 40 points on NASDAQ. I'd have to look up what we jumped. Let's see. What did we jump when we rolled forward? Looks like went from 14.5 to 14.7, about 200 points. So running about 200 points rich on NASDAQ. Yeah, we could poke above this about 200 points and roll over. Be careful. All right, this is going exponential. Exponential stuff tends to come right back down exponentially. Exponential up, exponential right back down. Seen it play out time and time again. Russell has opportunity to catch up. Still lagging. Doesn't have a big gap in this one, oddly enough. And it is in rebalancing. That wraps up next week, I think. And the target's up here. We could easily run up to the $2,000 area. Russell is looking quite bullish right now, actually. It is lagging way behind, way behind. The August high on Russell right up here in this 2050-ish zone right in here. We're way below that. And coming back up quickly, this thing could pop again. Don't be surprised. But remember, the regional banks are in there, and that stuff is not resolved, especially if we get another rate raise. CL, oil is kind of churning a little bit. Right down here, trying to find a bottom. Did make a lower low than we had, so we're kind of resetting the count here. We break out over this high. This is still a measured bounce setup and still set up for super bullish. Doesn't really affect the targets much. We just kind of move it over just a little bit. Yeah, I don't have the ability to move it over yet, but the bigger pattern that's cooking in here, Cisco, huh? Set that up right there. Must be market open, Cisco. So that throws target right in the same spot. Doesn't really even affect it. Right in the same spot. And then gold, still probably gonna spike down. Could break out, but just consolidating sideways. Bitcoin consolidating sideways after touching the roadmap line. Ethereum consolidating on the roadmap line. Dollar looks like it's breaking down, pushing below. Probably going down to 100. Back to the lows. SPY, a lot of indexes showing up on the list this morning. SPY popping, yeah. Be careful. FOMO rally. XRP trying to break out. Has resistance from that prior high. Rejection zone right there. Rejecting again so far. If we get above that, that sets XRP up for a nice potential run higher. Probably up in the 80 cent, 90 cent area. Right up in there. Right up in that zone. QQQ. Yeah, just working on climbing the fib ladder. Once we get there, it's highly likely to come revisit the roadmap line, which is down around 318 right now. Please be careful. SoFi, wow. Yeah, $10. Next target up. BIOR. Looks like we're rejecting the roadmap line. Oracle, right up into the target zone. That's as high as I expected it to go for right now, although there is potential we go on up to 134. That's an exponential move. It's going to come back. It's going to do it at some point. They don't just all go exponential and stay up there. MANU, Manchester Movies and Entertainment, huh? Just kind of chopping. It has the potential to break out if we could get the right tool. Break out above here. We could go on a run. Probably should make that flat instead of an angle. And breaking above that prior high can take it up to 32, possibly 38. Not a huge upside opportunity right now without another pullback. This one looks like hot garbage, continuing to go on down. DJI, Dow Jones, Industrial Average, just stuck on the roadmap line there. Not really going anywhere. Oh, look, there's another covered call there, Goose, if you're watching this later. IWM, stuck at that resistance. If we can break out, sets it up to run up to this 207 area. Stuck at that resistance, though. We can roll over. Be careful. Adobe, yeah, it keeps on trucking here. We broke above the resistance. The next set of resistance is up here where we consolidated at the highs. So looking forward to, it may get a little retrace. I would highly expect this to possibly do this somewhere in there before it can do that. We saw that on Netflix where it retraced back to the roadmap line before it could get up into the box. This is the gap box, and eventually it'll fill that gap for Netflix. And Netflix was on the list here this morning too. In RGU, continuing to churn a little bit. And that's popping on oil, moving up off the low yesterday, from yesterday's low. SOXX, continuing to climb the fib ladder. I would be careful. Very, very, very careful. That move is getting extended. Even off the big retrace, there's not much left. Off the little retrace it did, we're hitting the 1272. 519 would be the next level up. And then probably another pullback. TM, Toyota. Wow, that's a nice move on Toyota. Popped above the resistance. What'd they announce? A deal with Tesla? Let's see. Apparently announced an EV of some sort. Announced their EV strategy. And stuck in that consolidation box right there. Baidu running back up to the resistance. I wouldn't expect much more because we've found a top there like 5 or 6 times. But right back up to 154. Ulta, potentially working on turning off the bottom. But right now that looks pretty bad. We've got a large gap to fill. Large gap resistance right there. From about 430 up to 485. So 50-point resistance sitting right on top of us. NVIDIA continues to churn in this spot. Be careful. This can break. That's a large move up. That's 37 times price to sales. And it's way up there. And Netflix continuing to work on filling the gap. And they added millions of subscribers after cracking down on password sharing. That was the plan. Back on the plan. MDB potentially trying to break out here. The next level of resistance about 466. And then, of course, at the ultimate highs up there around 600. And we've been blasting off higher again exponentially without a large pullback. I would be very careful chasing that one higher. FNCH, therapeutic medical nursing services. Yeah, garbage. Down below the roadmap line. Down near the lows. I don't care what kind of pop it's working on. It's looking like hot garbage there. It looks like a reverse split, 30 for 1, which is not bullish. That's going to be bearish and continue dropping. It could have done 300 to 1 and it would still be extremely bearish. All right. Expectation for the day. But hey, without any, be careful. Tomorrow, looking like FOMC meeting. That's the unknown. So looking like we're going to continue higher, drifting higher. We could break at some point. SOXL, the target was 27 for the conservative, aggressive target at 33, and head and shoulders target at 39. This was chart of the week from like a month and a half ago. This thing's just been working its way. Entry above 1850 and is there's the targets. All right. Target, is it moving today? Not really. Not moving at all. It's garbage. Garbage chart. It's not a garbage company, but it's a garbage chart. And support is on down here at the COVID lows. We do have a little consolidation we kind of sat at right there that may provide support. But we can see it dip all the way back to the COVID lows at 90. Please be careful. Now, coming up at 5 p.m., I have 30 minutes of awesome. 5 p.m. Eastern. I'll get that live stream up and going here in a little bit so you can mark it on notify me or whatever the button it says. Come back and watch me. I'll do 30 minutes of your requests at least. Lately, we've been going over an hour. I try to hit everybody's requests. And make sure you're subscribed so you can chat with me and let me know what your request is. So otherwise, I will see you at 5 p.m. That's after the market closes. And have a great day, everybody. Bye for now.